सक्सेशन प्लानिंग क्या है और इसका नीड क्या है हमारे लाइफ में? वी हैव नेवर सीन अवर पेरेंट्स डूइंग एनी फॉर्मल सक्सेशन प्लानिंग.
Simply stated, succession planning is a systematic process. One of the reasons why succession planning has become important is due to couple of factors.
इट इज इम्पोर्टेंट कि विल लिखें तो आपकी नीड के हिसाब से आपने जो डिस्क्राइब किया है वैसे आपका वेल्थ पास ऑन होगा.
In fact, will लिखने के बहुत सारे कारण हैं.
द विल इज डूइंग सो मैनी थिंग्स. अगर विल से मेरा काम हो रहा है तो देन व्हाई शुड आई ड्राफ्ट अ सोफिस्टिकेटेड टूल लाइक अ प्राइवेट फैमिली ट्रस्ट व्हिच इज लुकिंग वेरी कॉम्प्लेक्स फ्रॉम आउटसाइड. So what is the purpose of private family trust? What is private family trust?
I think it's a great question, and I believe that's the core of our today's podcast.
If divorce happens for the next generation, then also they are feared that the wealth will go as per the Indian laws. So in all these conditions, I think you are saying that the trust will help to protect the wealth.
You know, as they jokingly say, marriages are made in heaven, but we are living on earth, so it needs to be tested.
I am planning an IPO. I want to list my company. Is it important that I should create my trust from now or after the IPO? What do you suggest?
Definitely they should think of creating this before IPO rather than going to SEBI after IPO. And you have the classic example of one clothing company, right, where the father gifted everything to the son in the hope that see, not all Dasarath have Rams.
One question that commonly comes from the clients is that if I create a private family trust, will it help me to reduce my income tax liability?
The answer is
Hello viewers, this is Prakash Lohana, founder and managing director of Ascent Financial Solutions, a SEBI registered investment advisory firm, and I would like to welcome all of you on today's podcast that we are doing on very important topic, which is succession planning through will and private family trust. And basically, I have spent more than 2 decades on wealth creation with the families and succession planning. And I would say that this is a very important topic from the point of view that in India, we take this topic very informally and very lightly. We spend our life on creation of wealth rather, and we don't take care that how to preserve that wealth and how to pass on that wealth to the next generation. So today's podcast is about preserving and passing on your wealth to the next generation in the best possible way, and we will see will and private family trust as the 2 tools. And today we have CA Mr. Vishal Gadaji with us for this topic, and Vishal Gadaji is a chartered accountant by profession, and he has spent 26 years in taxation advisory, succession planning and transaction advisory. He is founder and CEO of Artus Consulting, which is a firm having their offices in Mumbai, Ahmedabad, Gandhinagar, Delhi, Bangalore, and he leads a team of 75 members, and their specialization is succession planning. Vishal ji has done succession planning for very, very prominent and wealthy families of this country. So thank you, Vishal ji, for being with us on this particular topic. Thanks a lot.
Thank you, Prakash Rai, for having me here. I'm quite excited to be on this podcast.
Ji. So Vishal ji, my first question is, what is succession planning and why do we need to do our succession planning? So हमारा नॉर्मल टेंडेंसी ये रहता है कि इंसान सारी ज़िंदगी वेल्थ क्रिएट करता है और उसी पे फोकस रहता है. तो ये सक्सेशन प्लानिंग क्या है? वी हैव नेवर सीन अवर पेरेंट्स डूइंग एनी फॉर्मल सक्सेशन प्लानिंग. तो वी डोंट अंडरस्टैंड कि व्हाट इज सक्सेशन प्लानिंग और इसका नीड क्या है हमारे लाइफ में.
See, simply stated, succession planning is a systematic process by which you pass on your wealth, values, and instructions, to the next generation. And one of the reasons why succession planning has become important is due to couple of factors. See, one is the explosion of wealth. जो wealth 20 साल पहले थी और जो आज है, जो valuations 20 साल पहले थी और जो आज हैं, today is very different. It is astronomical. Second is the human family dynamics are changing. Couple of decades back, everybody would stay united. There was an unwritten principle that we will listen to the patriarch. There was a single leader in the family. It is not necessary that after the patriarch dies, the family will follow the same model. For example, a patriarch might have 2 sons, right? एल्डर सन, अ यंगर सन. आज ऐसे ज़रूरी नहीं है कि छोटा भाई बड़े भाई की सुने. and therefore you need a system where you are able to achieve balance after you are not there. So therefore, in simple words, a succession planning is a systematic process to transfer wealth, legacy, and your instructions of how you want your family to use the wealth, invest the wealth, but more importantly, the non-financial aspect of succession planning, that how do they bond together and live together.
सो सक्सेशन प्लानिंग में हम प्राइमरली सुनते हैं कि विल बनाना चाहिए. तो व्हाट इज विल, एंड इफ वन हैज़ नॉट मेड हिज विल, व्हाट आर द कॉन्सिक्वेंसेस? सो क्यों बनाना चाहिए विल, इसके बारे में थोड़ा बताइए.
सी, विल तो बेसिक डॉक्यूमेंट है. सो द स्टार्टिंग पॉइंट ऑफ सक्सेशन प्लानिंग इज विल. क्योंकि विल में आप आपके डिज़ायर्स एक्सप्रेस करते हो. यू बेसिकली पॉइंट आउट एज टू हाउ द वेल्थ विल बी डिवाइडेड, टू whom it will go. You can also create restrictions on how that wealth will be utilized, of course in a limited manner, while there are superior tools available. But you'll be surprised that in our experience, when we deal with multitude of clients, intuitively I believe 80% of the people don't create wills. Either they believe they are going to live forever, or people are so busy in their day-to-day struggle, day-to-day work duties, that they miss out on this very important part, because death is uncertain. So will, in my view, is the bare minimum for a succession planning. Now if you don't create a will, then the wealth passes on to your family members basis the relevant succession laws which apply. For example, if you are a Hindu, right, the Hindu Succession Act will apply. If you are a Muslim, there are Mohammedan laws of succession, and those succession laws are automatic. So it may, for example, just to give an example, let us say I have a wife, I have a daughter, and I create a will, and what I want is that while everything will go to my daughter, right, I want my wife to take control and gradually pass on that wealth and control to my daughter. I can write it in a will. But if I do not do that, then under the Succession Act, my wealth passes on to both of them jointly, maybe in the ratio of 50-50. Then there are formulas applied. And that may not be desirable if my daughter is relatively young, or she's just 19-20, where she's yet to learn the ropes. So will is very important, because in the absence of a will, the succession laws kick in. Sometimes what happens, you have to protect a family member from himself. Sometimes a lot of wealth going in the hands of the family member is also not good. And that is why in a will you can come up with a structure that who will be the responsible person, how will the wealth, etc. happen. And in the absence of a will, obviously you have no control, so which effectively means आपने succession planning किया ही नहीं है per se. So that's the bare minimum. Will is the starting point. And therefore every client which comes to me, the first question we ask है आपका will है कि नहीं है. And I'm surprised sometimes a client might have hundreds of crores in his bank account. He says मैं इतना busy था, इतने 20 साल पहले मैंने will नहीं बनाई है. So we tell them आज ही बनाइए. Simple 2 line will बनाइए कि मेरे बाद, let's say it goes to my wife, or it goes to my parents and wife, or it goes to my whatever, my children. But I'm saying just create a simple will, right? And then you start thinking in detail of how you want your wealth, your values, your desires, to be kind of adopted by your family after you.
सो व्हाट आई अंडरस्टैंड इज कि अगर मैंने विल नहीं बनाया तो माई वेल्थ विल गेट पास ऑन टू माई नेक्स्ट जनरेशन और माई स्पाउस in the way it is written in the succession laws, not as per my wish. Am I right? So if a Hindu male dies without writing a will, then how will his wealth get distributed as per the Hindu succession laws?
So typically what happens, that there are categories of relatives, and in that categories of relatives, the wealth passes on according to a formula. Like the example I gave, I have a wife, I have a daughter, I died intestate, which means I died without a will. Then 50% goes to my wife, 50% goes to my daughter, in that sense. Similarly, if you have parents, right, then a portion goes to your parents, portion goes to your wife and child. So those are formulas prescribed in that laws.
So no one would like that if the person dies and the wealth is distributed as per the succession laws. सो इट इज़ इम्पॉर्टेंट कि विल लिखें तो आपकी नीड के हिसाब से आपने जो डिस्क्राइब किया है वैसे आपका वेल्थ पास ऑन होगा.
यस, इनफैक्ट विल लिखने के बहुत सारे कारण हैं. अगर मैं विल नहीं लिखता हूँ तो हो सकता है मेरे फैमिली मेम्बर्स को प्रोबेट लेना पड़े, सक्सेशन सर्टिफिकेट में उसको चैलेंजेस हो गए. ऑफकोर्स विल में भी अगर आप इमूवेबल प्रॉपर्टी ट्रांसफ़र करते हो तो आपको प्रोबेट की ज़रूर है पर से, बट विदाउट अ विल इट बिकम्स अ बिट मोर डिफिकल्ट. द थियोरिटिकल पॉसिबिलिटी ऑफ डिस्प्यूट्स happening increase, theoretical possibility of some claimant coming in saying कि ये asset तो मेरे लिए इन्होंने रखी थी increases. So at least a will reduces those risks, reduces the possibilities of a third party coming in per se. And then of course basis the will you will go to a court, take a probate, so that now your assets are secured, you are able to sell it if you want, you are able to use it if you want, etc.
So if the will is doing so many things, अगर will से मेरा काम हो रहा है, तो then why should I draft a sophisticated tool like a private family trust, which is looking very complex from outside? So what is the purpose of private family trust? What is private family trust? Please educate our audience.
I think it's a great question, and I believe that's the core of, I believe, our today's podcast. So what happens is that typically you may just not give the wealth away to your family members, right? Because then it is under their control. They can use it the way they want it. And as I earlier mentioned, sometimes you want to protect the family member from themselves because of lack of financial knowledge, because of, innocence of a family member, somebody taking undue advantage. There could be a risk of an estate law coming in future, because if you pass on wealth either with or without a will, the estate law is a risk. Disputes could be possible. You need a probate. But if you want to come up with sophisticated rules, and let me give an example. What if I create a rule to say that 50% of my corpus will never be spent till my daughter, let's say, touches 35 years, right? And after that, the maturity is gained, and after that, they can do whatever they want. But I'm creating certain locks on the wealth. I'm creating certain rigors on the wealth. I want to write that they cannot invest in risky assets such as bitcoins, etc. In a will you can write all that, but if you create a private trust deed, the manner of creating that sophistication with a very simple structure is much more effective. So if I have to simply define a private trust, which is of course under a very old law, Indian Trust Act of 1882. In fact, the trust law in our country is older than the Companies Act. So in a trust, what happens is that you create a document, you make somebody a trustee. You yourself can be a trustee in your lifetime. You identify the beneficiaries, which in my example could be my wife and my daughter, and effectively you become the settler, like I become the settler, I become the trustee, and they are the beneficiaries. And in future, I create a line of succession. I say that after me, my wife becomes the trustee. Something happens to my wife, my daughter becomes the trustee. But if let's say my daughter is not major, she's still a minor, then I'll create a guardian trustee. If something happens to the guardian trustee, I will create a guardian trustee number 2. This is how the line of beneficiaries happen. God forbid if all three of us are not there, then the wealth can go to some charity, or it can go to a part to my distant family members, part to charity. I can create all those scenarios, I can create all those permutations. Effectively, I can look at multiple scenarios, multiple permutation, and I can put it into a very structured manner. Now, can you do that in a will? You can. The problem in a will is that it does not have a very sophisticated law to govern compared to a trust, where a trust has a clear framework of what are the duties of a trustees, what are the rights of a beneficiaries, how much the trustee can act, what are the boundaries a trust deed can create, what are the boundaries which a beneficiary has to be, multiple things, And one of the biggest advantage of a trust is that you pass on the wealth for the benefit of the beneficiaries, but without necessarily transferring it in the legal name of the beneficiaries, compared to a will where I have transferred it in the legal name of the beneficiaries. So to a great extent, the control is loosened. They can inadvertently misuse the wealth, compared to a trust where the charter of the trust deed may not allow. And therefore, I believe that fundamentally, a trust deed is nothing but a will. It's a living will. and it's a far more sophisticated will, and it comes with couple of advantages. First disadvantage of a will is I still need a probate. In a trust deed, you don't need a probate because the wealth is in a trust. In the name of the trustees can change, but effectively there is no death of a trust, subject to the law of perpetuity under the Transfer of Property Act. Second is that because the transfer of property has happened already, as distinct from, let's say, in a will, the property transfers after my death, the chances of dispute are minimized. Because if I have transferred the property today to a trust, if somebody wants to object, they can come today. They can't come after 20 years, after 50 years, when I am no longer there per se. And also, if you look at the history in our country, you will see more litigations around a will compared to a trust. And lastly, if at all, we had an estate law introduced in 1953. VP Singh, who was the then finance minister, kind of took it out in 1985. But what if the law comes back and an estate law gets triggered on two conditions? One is somebody dies, and on death, the wealth passes on. Now, you can't stop the first condition. Someday we all will have to, face the first condition. But we can ensure that before I pass away, the wealth has already been secured in a trust. So these are some of the advantages of a trust. A much more structured document. I would say it's a will, it's a living will, but much more structured will. No requirement of a probate. Your life after somebody passing away becomes easier. It's life as usual. Third is, if at all tomorrow an estate law comes, you have a better chance. Of course, it depends on how the law is drafted, but you have a better chance of defending yourself against an estate law. And fourth, as I mentioned, the non-financial angle. How you want your family members to behave. You do not want them to invest in asset A, asset B, asset C. You can put in. You only want them to invest in asset P, asset Q, asset R. You can put in. You do not want them to touch the wealth beyond a percentage. You can put in. You do not want them to take risky loans. You can include that. You can absolutely imagine what you would have done in your presence. The trust deed is compelling them to do it per se. So in a way, you are creating a gradual succession for them so that they experience what it is to manage wealth. And in my experience, sometimes earning wealth is more easier than managing what you have earned. Yeah.
Very well said, Vishalji. So what I understand is basically trust is like a rule book that I am creating for my next generation. Yes. That they can use a certain amount of wealth in a certain way that I have defined. They cannot invest in the instruments where I have restricted, or they cannot do something that can go wrong, or even for that matter, is it a lot of people have this fear that their next generation will misutilize the wealth, or their spouses will misutilize the wealth. So will the trust be able to protect out of this? The other fear that people have is today the marriages are not lasting much, lot of times. So if divorce happens for the next generation, then also they are feared that the wealth will go as per the Indian laws. So in all these conditions, I think you are saying that the trust will help to protect the wealth.
And let me give an example. As they jokingly say, marriages are made in heaven, but we are living on earth. So it needs to be tested. A couple of years back, I had visited London in a very famous law firm, Mishcon, and they had come up with a publication which said 18th century laws for 21st century relationships. So our laws are very archaic. Relationships have changed. Who knows, after 100 years will the concept of marriage remain or not? So things are going to be different, and you can't stop it. And unfortunately, in our society, you now see an increasing trend of more and more divorces happening, more and more bitter separations happening, and therefore many times a patriarch wants to protect his wealth whenever a son-in-law comes or a daughter-in-law comes, and he hopes that person becomes one day an integral member of the family. But obviously for the initial period there is always some skepticism, and that is one of the ways where I have seen families protecting this kind of a scenario, because we still don't have a prenup concept in India, right? I have seen some families signing prenuptial agreement, but the enforceability of that in India is a big question mark. So that's a debate for another podcast. But if the wealth is put in a trust, where let's say my son is one of the beneficiaries amongst many beneficiaries, and it's a discretionary trust, which means the discretion lies on me as the managing trustee. And tomorrow, God forbid, the child goes through a bitter separation, he can give as part of his alimony. This is what he has. I would believe that he might be able to argue that I'm a beneficiary. I have a beneficial interest in the trust. But this is a discretionary trust. The interest is not absolute. And therefore, it may influence the ultimate judgment on alimony. This is the basic concept, how families are applying today. But if, let's say, I have transferred a sum of 500 crore to my son, obviously that is his wealth. And obviously, if he's separating, he might need to part a small portion of that with his wife. So there is, I wouldn't say a trust is a perfect solution. It makes your alimony liability zero, right? And I believe there is a moral responsibility of paying a alimony, but it does help mitigate the quantum of flow, if at all, unfortunately, a separation happens.
So suppose I have a 19-year-old son and I create a will in favor of my wife. And if something like recently one of the flights of Air India from Ahmedabad taking off to London crashed and everyone passed away. So if something goes wrong with us, both of us, then in case of will, my son becomes owner of the assets immediately. But in case of trust, as I understand, he is not owner, he is only beneficiary of the wealth. And I can create a rule book. Suppose he can use 50 lakhs every year or whatever rules I want to put. Am I right?
Absolutely. Very, very, very good example. And while these incidents are few, they do occur. And when they occur, they catch you unprepared, so absolutely. Because the idea, Prakash Bhai, is, and, we as Indians ultimately, build well for our children, for our son, our daughter, and sometimes our son-in-laws. And therefore, what we want is them appreciating the complexity of managing wealth, they adopting principles of prudence in their life. We give them a platform where they can make themselves stand on their own rather than relying on our wealth. And that is what we want. And hence, in your example, when you say that I might have 500 crore rupees in my bank account, but he's only allowed to spend 50 lakhs, which is a good sum. But now let him create something for himself. And who knows, after 10 years, he may not need the wealth, which is there as a protection. So very true. I fully agree with you.
And another question that comes to my mind is, what about the families where the children or some member of the family is mentally or physically disabled? So will the trust also be helpful to protect the wealth for such person?
Yes, absolutely. In fact, we have done a few trust. There was a classic case of a family having two child, both being, I would say, physically challenged. And there, the concept of a guardian trustee becomes very important, because obviously, till the parents are there, they will take care of their child. But after them, the important point is creating a governance framework for a guardian trustee or a set of trustees per se, where you sometimes also create some incentives for the trustees to spend meaningful time, so that the concerned beneficiaries are taken care of. So, in fact, there I would believe it's a must. A will is not enough. Where you have such a scenario, where you have a specially abled child, you have to create a trust. I believe it's a bare minimum.
Can you throw some light on different parties to trust, like the person who is creating the trust or the beneficiaries or trustees? Can you explain it little bit?
See, there are generally three parties. One is a settler, the creator, and the person who creates the trust is known as the settler. The person who creates the trust could be the main patriarch itself, or it could be one of his friend, or sometimes even his lawyer or his chartered accountant can create. But once the trust is created by the settler, he steps out of the trust. He has no power. And then the powers are typically shifted to the trustees. So the second, and which in my view the most important role, is that of a trustee. That person who is entrusted along with certain rule books to manage the trust. And the third set of player is the beneficiary. And I'll give an example. uh, Suppose I have this watch, which I'm wearing, and I suddenly uh, you know proclaim orally that, Prakash bhai, I am making you as the trustee of this watch, and let all members who come to my office look at that watch and be punctual, and they can use the watch when they want. By proclaiming this, I have created a trust here, because I settled the initial property. I am the settler. This is the trust fund, the watch. You actually became the trustee, and all those people who can use the watch, they are beneficiaries. So a trust has been created. So the concept is as simple as that. Yeah.
Okay. And once I create a trust and once I create that rule book in the trust, is it possible to make some changes afterwards if I realize after 4 or 5 years that the circumstances are changing? Then is it possible?
It depends on how the trust deeds are drafted, and therefore the most important aspect of a trust deed is to draft it appropriately. And I would believe in most cases we allow the future trustees to make amendments in the trust. The broad spirit of the trust cannot be done away with, right? If you say it is for the benefit of ABC family, it has to be for the benefit of that family. But the power of amendment generally is there. Sometimes the power of amendment is absolute. Any trustee, let's say unanimously, can make whatever changes it wants. Sometimes the power of change is limited, that the trustee can be changed other than clauses A, B, and C. You can lock certain clauses forever. And then you can also make it a participative power. The trustees can, let's say, amend the trust with, let's say, 75% consent of the beneficiaries. So it is a complete white slate. But yes, if you draft the trust appropriately, typically it should allow an opportunity to amend the trust deed in future. And we generally recommend that the instrument should be flexible, because we do not know after a couple of years how the laws will be drafted, etc.
Another question face with my clients is whenever we suggest our clients to create private family trust, they tell us that I have a very limited wealth. I don't have that 500,000 crores of wealth. अगर मेरे पास 500,000 करोड़ होता तो ही मुझे ट्रस्ट बनाने की ज़रूरत थी. I have a very limited wealth of 30, 40, 20, 50 crores. So what is your view on this particular understanding or myth or hurdle?
See, the thumb rule is very simple, that if he believes that whatever he has, 20, 30 crore, it is important for his family, right, then he should create a trust. uh, but if he believes that what I have and what I'm passing on to my family is not going to make much impact, right, then he may not create a trust. And I'm sure even for such a person, if you tell him that, but 20, 30 crore, when you pass on to your family, would that be a critical wealth? And I think his answer is likely to be yes. Then obviously, while it's a small wealth from an absolute perspective, from a relative perspective, it's a very important wealth. And therefore a trust, as a thumb rule, I would say anything beyond 25 crore qualifies, because if you look at the wealth multiplication, a 25 crore today could become 50 crore after 5 6 years. The person may no longer be there after 25 years, but by creating a foundation of a family succession, I think he's just making his life and his successor's life easy per se. So in your example, I think yes, he should look at a trust. And unlike popular perception, which is incorrect, managing a trust is very simple. You don't have a regulator, unlike a company which has a MCA, ROC. There is a regulator. You have to make filings, make reportings, make audits. A private trust is absolutely, unlike a charitable trust, which has a charitable commissioner, a private trust has no regulator. So after you create a trust, what you need is a good accountant. You need a good chartered accountant who will take a PAN, who will file returns. You will need a bank account, and maybe you need a demat account. That's it. So it's a very, very easy structure to maintain. And of course, I think people don't understand because they have never done it. But once they do it, they will realize it's not at all complicated.
One point that you pointed out is the charitable trust. So we also face this question that how people are fed up dealing with or managing a charitable trust because they have to go to charity commissioner for everything, every permission. So how this private family trust is different from that charitable trust, and it is easy to run.
See, the biggest distinction is that a private trust does not have a regulator. So, unlike a charitable trust, where the beneficiaries are the public at large, and because the beneficiaries are public at large, the government, the state governments have the power to institute a local law, a local state law, where they can appoint charity commissioners to overlook and supervise, to ensure that these are public funds, they are not misused. A private trust is absolutely outside the ambit of any government, any charity commissioner, any regulator, and which means you merely have to follow the trust deed rules, which you have prepared, and follow the trust deed rules per se. So, absolutely no regulator can kind of have jurisdiction over a private trust.
One more question is that how the trust structure, private family trust structure, will help to the business families or industrialist families specifically. Why they create a private family trust?
For multiple reasons, and let me give a real life example without naming that group. It was a software group uh, owned by three brothers. Each brother apparently held equal stake. A foreign buyer came and offered the first brother, the main brother who was running the show, that can I buy you out? He says no. But he went and he convinced the other two brothers. And suddenly, the first brother was in a minority. He was forced to sell his shares. Uh, but what if all the three brothers had created a single trust, a private trust, and for the sake of simplicity, we'll call it a business private trust, and they would have transferred the shares into the private trust. And in the rule book, they would have said that till all of us unanimously agree, we will not sell this business to anybody, right? Then, maybe the brother who was leading the show could have salvaged, his company. So this is one example. Second example is where you want to professionalize the company. Like, we have a client, he has two daughters. Both of them are US citizens. We don't know whether they will stay in US, they will be in India. And he runs a large, business. But at some stage, he may retire. His daughters may not take over. Uh, he puts those shares in a trust, himself becomes the trustee, but at some stage creates the right board at a trust level where the company can run on a professional basis, but the income which comes to the trust is then taken care of by those board of trustees. You look at Tata Sons as an example, right? A holding company of many Tata companies. Tata Sons itself is governed by multiple trusts. Obviously, those trusts are charitable, but the concept is same, where you are trying to separate out the business with your family affairs per se. So that is going to be, in my view, a defining attribute of the families going forward. Where family members may do what they want and the businesses will do on its own course. Like, I have one example. The company is into a retail, publishing and all that. Multiple branches are part of that. Most of the second generation do not want to be in the business. Somebody wants to become a musician, somebody wants to become a global traveler, somebody wants to become, a writer. Few people have, moved into the medical field. How can you, keep their wealth together? What is the structure available? A private trust is a beautiful structure for them. And there is an example of, let's say, the Rockefeller Trust. While I've not studied that structure much, but that has withheld the passage of time, where for hundreds of years it has kept the family together in certain manner. Where the wealth of the family, the businesses are into that trust, which actually binds everybody together. I am told that once a year, everybody comes and tries to meet up. So a trust can be a beautiful way to keep families together for, years and years and centuries to come. Yeah.
So for the business families, as you very well said, but Does the trust also help from protecting of any business risk, like I am owner or director of a company and if my personal wealth is in my name versus in the name of private family trust? So whatever business risk I am carrying, will it also support me or protect me from that?
That's a very good question, and this is more relevant in the context of Indian businesses where the leverage is taken by the business entities. But the banks insist that the promoter shareholder becomes the personal guarantor. And to that extent, if the wealth is in the name of the personal guarantor and tomorrow the guarantee gets triggered, then that wealth, which was meant for the family, is actually at risk. And therefore, if he separates out his role as a guarantor and his role as an owner, where he moves the wealth into a trust, then, God forbid, if tomorrow there is a trigger of guarantee, the wealth which has been transferred into the trust ideally cannot be touched by creditors, with only one caveat, that the purpose of transferring the property cannot be to defraud the creditors, because one of the essential element of a private trust is that it is formed for a lawful purpose. And therefore, I'll give you two stark examples. I am sitting on a huge debt. I fear my creditors will knock on the doors any day. I transfer all my assets in a trust. 3 months later, the creditors come and I say, sorry, I have nothing to give you. They can actually, lift the corporate veil with the help of the court and say this trust is nothing but, it's a scheme to defraud us. But let's say 3 years have gone by, 3 to 4 years. After 3 to 4 years, creditors have come back. It's very difficult for a creditor to prove that 3 years back I was transferring and preparing for this moment. And this is therefore, I believe, with the passage of time, your trust becomes stronger and stronger and stronger from any external regulator or any external creditor. So you're absolutely right. It's a very good point that if I'm a personal guarantor, I would not like the wealth which is meant for the family to be at any kind of a theoretical risk. I better transfer it to a trust, and hopefully my company will pay off, the loan with good business profits. And one day I will no longer be the guarantor. But if that doesn't happen, I know that there is a pot of wealth which is available for my family. Business will come up and down. It will have its share of good days and bad days, but it can't disturb the life of my family. So yes, a private trust plays a very important role in that.
One more linked question. Say I am promoter of a company. 2 years, 3 years, 4 years down the line, I am planning an IPO. I want to list my company. Is it important that I should create my trust from now or after the IPO? What do you suggest?
Uh, so definitely better to create a trust before the IPO, shift the shares to the trust before you file a DHRP, and actually make trust as one of the promoters. And there are two benefits of doing it before the IPO. In fact, three benefits. One is that I don't have to go to SEBI takeover panel for a prior approval, because once I am a listed company, any transfer of shares which triggers control, change of control in favor of a trust, I have to take a prior approval. It's not a very cumbersome process, but it still takes sometimes 3 to 5 months. Second, the way the current laws are worded, till the total shares, are more than 3 years old, which means I have listed in year zero, till 3 years have gone by, SEBI may not give me an approval to transfer the shares because of the manner in which the laws are currently worded, which means I have to wait for 3 years before going to SEBI and getting an approval. And third, very interestingly, typically one of the better ways, especially when you have a large family, multiple branches, multiple categories of assets, is to create a multi-tier trust structure. You create a master trust, you create a sub trust, where child 1 can come in sub trust 1, child 2 can come in sub trust 2, sub trust 1 and sub trust 2 are beneficiaries in the master trust, and master trust is then holding the wealth. But under the current rules, SEBI is not permitting creation of sub trusts for whatever reasons, right? So the rules debar that per se. So moment you apply to SEBI after IPO, you are bound by these restrictions. But if there is a structure already created, right, typically it's much more easier to sustain it per se. So yes, I would believe definitely they should think of creating this before IPO rather than going to SEBI after IPO.
Okay. So One more common understanding or mindset that people have is once I transfer my assets, investments into private family trust, then I lose the control of that. So, what do you say about that?
See, in most cases, the patriarch who transfers wealth substitutes his role from an individual owner to the managing trustee. So I would believe retaining control is paramount. And I would agree that a structure where a patriarch is losing control over his hard earned money is not worth in most cases, barring few exceptions. And therefore, the answer is very simple. You don't have to appoint any external trustee. The patriarch himself can become the trustee, and there is an intelligent way to become a trustee, so that from a tax perspective these trusts are not regarded as revocable trust per se. But yes, why to concede control? I believe that has to be one of the asks of any family, saying that our control parameters can't change merely because I want to get into a good structure. And you have the classic example of one clothing company, right, where the father gifted everything to the son in the hope that see, not all Dasarath have Rams. So why to take that risk? So control is paramount. You have given away the benefits. So the patriarch will hopefully never become the beneficiary. And if he wants to do an estate planning, he should not become the beneficiary. But till his lifetime, till his last day, I think he should be the managing trustee in most cases.
So, would you like to give any example that you have seen in your lifetime, in your professional career, where the informal way of succession planning completely failed? And one example you already gave, that informal way of succession planning where the father passed on the entire wealth during his lifetime and then the son told him to leave the house, is one of the examples. Any other example that you remember and you want to quote here?
See, you have the recent example of ex-husband of a celebrity suddenly dying, and in fact, he should have created a private trust, right? He had a complicated set of relatives, two ex-wives, the third wife claiming everything, multiple children, etc. And now you see it's all out in the courts, and it will take years and years and years to prove, because it's not a matter of law; it's a matter of fact. Everybody is trying to deduce what was his desire, and the only person who can say what was his desire is no longer there. So everybody is trying to interpret that piece of paper. Is it genuine? Is it not genuine? What does those spelling mistakes mean? What does those gender mistakes mean? Right? So it's unfortunate, and at some stage the court is only going to tell the parties, in my view, that why don't you go for a conciliation, because it's very difficult for a court to decide. Court doesn't care what he has written is fair, is moral, immoral. He says what's his desire, right? That's the law of succession. So that's one more classic example. He should have created a trust.
Very good example. One question that commonly comes from the clients is that if I create a private family trust, will it help me to reduce my income tax liability? So please also
The
throw some
answer
light.
is generally no, because most of these trusts are created as discretionary trust. You don't get slab benefits, but a trust is taxed in the same and like manner as a beneficiary. There could be certain small planning opportunities to save on surcharge. And let me give one example. Not that I'm encouraging people should do that, but just as an example. So let's say if my annual income was 10 crore, then obviously I would be subject to the highest surcharge. But if I spread that income over couple of PAN numbers, right, then my surcharge application could be lesser. There is a bit of a controversy around it. That could be one way where your surcharge might come down. Your tax rates will always remain 30%. But as a principle, a trust is supposed to pay tax what the beneficiaries would have paid. So typically there is no income tax savings. Yeah.
So with this, the today's podcast on succession planning through will and private family trust is over. We have covered almost everything in this podcast which is related to will and private family trust, and I am very thankful to Vishalji for giving such detailed explanation along with his examples which he had experienced in his professional career. So thank you, Vishalji. Thanks a lot.
Thank you, Prakash bhai. I thoroughly enjoyed this podcast, and thank you to the audience, who's looking at it. Thank you.